Tonight on the Crypto Nightly News, Domo Arigato Mr. Roboto. If you're considering buying your first bot to trade crypto, don't do a thing before you hear this episode. We'll go over everything you need to know to buy your first bot, and you'll hear from the king of all bots, Robert Grzesik, as we discuss my first foray into bot building with Lumiwealth. We'll have those stories and the crypto potato market wrap-up tonight on the Crypto Nightly News.
We all know that crypto is the term future of the digital asset compared to last year's survey.
Welcome to the Crypto Nightly News with Chris Jerry. Welcome to the Crypto Nightly News for September 4th, 2022. Happy Labor Day weekend. Tonight, we're talking about bots. They're changing the world from social media to the checkout at the local supermarket. Bots are everywhere. But where they are proving to be the most useful to you is in the crypto market. That's coming up. But before we get to that, we have to do a few things first, don't we? At the top of the list is a reminder. I am not making any financial recommendations here or offering any advice whatsoever. I'm just telling it like it is in the best damn crypto news show to grace the airwaves. So don't shoot the messenger, and remember this. This is for educational and informational purposes only. Now, it's Sunday of your 3-day Labor Day weekend and the last high holiday of the summer that was 2022. We've got a ton to get to tonight and only a half hour to get it all done. So get an extra brewski from the cooler and put a lid on the cooker because you have tuned in for an adventure into the future where bots can make you money. For Sunday, September 4th, 2022, welcome to the Crypto Nightly News. Now, let's get this party started.
Y'all ready for this?
Markets were mixed with Ethereum up and Bitcoin down for the 7-day look back. All eyes are on Ethereum right now as they gear up to merge and change from proof of work to proof of stake in the next couple of weeks. ETH was up almost 4%, while Bitcoin dropped below the 20K mark. By the weekend, down just shy of 1.5%, causing the total cryptocurrency market capitalization to drop below the 1 trillion mark on Saturday. Cardano, Polygon, Litecoin, and Cosmos all posted upper-end gains for the week, with Polkadot, Shiba Inu, Tron, Unis Sedlio, Uniswap, FTX token, Chainlink, Near Protocol, Monero, Bitcoin Cash, and Algorand all posting more modest gains. The rest posted red digits on the week. And in NFT land, DeGods and Blackbox and Raft, newcomers to the top 10 NFT list, all came in with triple-digit growth. While NFL All Day, Uniswap, So Rare, and Other Deeds were down. Now it's time for the Crypto Potato Market Wrap-Up. In a public statement Monday, the Federal Bureau of Investigation warned investors about security vulnerabilities in DeFi platforms. It also asked those who suspect that their investments have been stolen to approach the FBI through the Internet Crime Complaint Center or their local FBI office. In the statement, the FBI said that between January and March of 2022, cybercriminals stole $1.3 billion in cryptocurrencies, almost 97% of which was stolen from DeFi platforms, according to the U.S. blockchain analysis firm Chainalysis. This is an increase from 72% in 2021 and 30% in 2020. Cybercriminals try to exploit the open source nature of DeFi platforms and complex cross-chain functionality, coupled with investors' interest in digital assets. The agency added that they use vulnerabilities associated with flash loans, signature verification, and cryptocurrency price pairs to exploit these platforms. Citing legal issues it's facing in some European countries, Singapore-headquartered Crypto.com has backed out of a $495 million sponsorship deal with the Union of European Football Association Champions League. The cryptocurrency company that offers trading, DeFi, and wallet services, among others, was set to replace Russian oil major Gazprom as the sponsor for the next 5 seasons up to 2027. The UEFA ditched the deal with Gazprom in March after Russia's invasion of Ukraine. Crypto.com is expecting some legal and regulatory problems in trading and in operations in the UK, France, and Italy. The decision to back out at the last minute appears to be forced by the bear market, which has seen $2 trillion in market value lost in the last 6 months. Another crypto criminal bites the dust. Albanian authorities arrested Faruk Faith Ozer, the CEO of the Turkish cryptocurrency exchange Thodex, in the city of Elbasan this week. Last year, the platform ceased trading and withdrawals while the 28-year-old executive was rumored to have left Turkey with $2 billion in user funds. Despite not managing to detect Ozer's whereabouts, Turkish law enforcement agents jailed 6 other individuals connected to the fraud. 2 of those individuals were his brother and his sister. Faruk Ozer and his troubled crypto exchange Thodex made the headlines last year. The halting of all trading services and the simultaneous shutdown of the website caused significant losses for thousands of Turkish investors. And that is the Crypto Potato Market Wrap-Up, brought to you by CryptoPotato.com.
The Great Loop is Evel Knievel jumping the Snake River, combined with The Truman Show, combined with America's Got Talent. It's a combination of all of these different mechanisms all together, and we're going to turn it into a TV show.
So we've all heard of algorithms. YouTube, Facebook, Google, Instagram. They all use various types of algorithms to target advertising, make judgments about what you see and share on social media. They even decide what content they should promote and what they shouldn't using algorithms. For the first time in history, average, everyday people like you and me can buy or build their own algorithms to trade crypto, stocks, futures, and any number of other investments. And Lumiwealth, our title sponsor, teaches people of all walks of life to build these algorithms. Now, if you're not a DIY kind of person and you don't like to get your hands too dirty doing this stuff, before you rush out and buy a crypto bot, aka algorithm, to trade crypto, you really need to know a few things about crypto bots, including how they work and what they do. I used Lumiwealth to learn how to trade with bots, and in this episode, we will sit down and chat with Robert Grzesik, CEO of Lumiwealth, about an idea I had for a bot that we built in class into an algorithm at Lumiwealth. But there are businesses out there that sell bots, including Lumiwealth, so that you don't have to learn how to build them. You can simply buy them and upload them and be on your merry way. If you choose that route, you'll want to know what kind of options there are out there. According to Tech Times writer David Thompson, who wrote an article this week about crypto bots in Tech Times, one of the most important features of a crypto bot is its ability to handle multiple cryptocurrencies, i.e. Bitcoin, Ethereum, or any of the other thousands of crypto that are out there. If you only want to trade one currency, you don't need a bot that can handle every coin in Christendom. However, if you are looking to trade Solana or Monero or any of the more smaller coins, you'll want a bot that is programmed to do so. Another important feature of a bot is its ability to backtest. Now, backtesting is when you use historical data to evaluate how a bot would have performed through various other real-world past market conditions. Because as we all know, those who fail to learn from history are doomed to repeat it. Backtesting allows you to test your bot's trading strategies on historical data and allows you to see how your bot would have performed in the past without burning real cash. So you can adjust your strategies accordingly when you decide to go live. And my apologies to Mr. Thompson, but my most important feature for any bot you might want to buy is customer support. It's your money at stake here, after all. And if they don't pick up the phone or at least have a 24/7 live chat feature to help you in an emergency when things are going sideways in the market, you really don't want to do business with them, do you? Well, now that I've scared you, let's look at why you might want to try using a bot to trade. Bots are automatic. They run when you're catching your beauty rest, when you're eating Christmas dinner, when you're making love, or even when you're singing in the shower. They work when you don't want to, and since crypto never sleeps, bots can help you make trades when you don't need to and don't know it and don't want to know it. You have more important things to do than watching crypto prices, right? Bots can also help you stay disciplined with your trading. Emotions have no place in the cryptoverse, and they can help you manage multiple assets and trades for a more diverse portfolio without passion or prejudice. There are lots of bots out there that you can use. CoinLedger has a list of the top 16 bots they recommend online, and Guru99.com has a top 10 list that you see right here. A Google search can give you a bevy of options in bots, but our recommendation is, of course, Lumiwealth for all your botting needs. Choosing the right crypto bot can be confusing, and that is why I chose to build my own. But if you're the kind of person who doesn't like getting your hands dirty, here are some key factors to consider when selecting a bot to trade crypto. To start with, you need to assess your own trading goals and objectives. What are you looking to get out of using a bot? Are you looking to automate your trades, or are you just hoping to find a bot to help you make better trading decisions? If you're like me, a free trial is also really important as well. I hate paying for something and then finding out that it wasn't what I thought it was at first. Some platforms offer free trials and some don't. If that's your thing too, find out first. Next, do you want social trading to compare strategies, or do you want to go it alone? Many trading tools have big investments in community development, while others are more suited for the lone wolf traders out there. Compare how active the trading communities are on Telegram, Reddit, or Discord. It's also important for you to consider the country and language of the trading community, as crypto regulations are different all around the world. You also need to consider the features and functions that are important to you. Some bots are simple and only automate trades, while others offer more advanced features like market analysis and signals. Do you want to try backtesting? And if you do, does this platform support that function? You also want to know which indices it supports. It's not possible to maintain a complete index of every coin currently traded in the crypto market. So a good trading bot should have educational content that details which coins are sampled and how market caps are weighted in the index. Most of the newest crypto bots are cloud-based. So if convenience is a high priority for you, this is something to be aware of. If a trading tool is not cloud-based, you'll have to keep your server/computer running at all times to make sure you don't miss any trades. While it does require some technical know-how to run trading software on your own server, the upside is that it's more customizable and typically has higher performance. If this is a priority for you, then there are some great open source programs out there. Finally, let's talk about the cost of the bot. Some bots are free, while others charge a monthly or annual fee. Decide what you're willing to spend and select a bot that fits your budget. And along those lines, taxes. It can be easy to rack up a high number of trades when trading with crypto bots and automated tools. This can make reporting your crypto gains and losses on your taxes challenging if you don't have the right software. It's important to look at the crypto tax software companies that are compatible with your trading platform of choice. Having a good crypto tax software that supports your crypto trading strategy will eliminate some of the stresses of trading. This week in crypto class, I was tasked with coming up with an idea for a trading algorithm that we could build in class. Given the volatile nature of crypto and the relatively small value of the smaller coins, I thought up a strategy that would watch the top 30 coins and buy in when any of them started to rise more than 1%. Because bots never sleep, they could watch the market for me and automatically buy in when they saw a market increase happening. Conversely, when the price started dropping, they could sell and wait until the next rise happened again. I named it the 1% strategy. On Wednesday, I presented my idea in class, and the class decided, along with Robert, my instructor, that we should try to build it on the fly in class. In truth, Robert did most of the coding because he's almost a savant when it comes to writing code, and we watched in amazement while he casually typed out code and brought my idea to life. We ran a short back test before the class was over using Bitcoin data, and while it only ran for a short period, the early indications were that this could make a lot of money. Robert ran the code overnight and saw that in the long run, 1% wasn't the right rate to program in, and he upped it to 2% and back-tested it for a full year of data. When I woke up Thursday morning, I saw a message from Robert that 2% had a much more lucrative outcome. That's the value of backtesting. Here now is a conversation Robert and I had about my idea and how the bots I came up with can potentially make a ton of money.
So ultimately, you last night you tried out the strategy. And what did you find? How did it work?
Yeah, sure. So I tried your strategy. Basically, you could change a lot of settings in it, right? So your strategy, again, is basically you buy Bitcoin when it goes up by more than 1%, or that was the original parameter, right? When it goes up by more than 1%. So in other words, we're probably like in some sort of momentum or something like that, where it's going up.
Yeah. And
then basically put in a basically an order that if it falls more than 1%, then it will sell, right? So there's actually a term for this. I'm forgetting the term for this type of order. But basically it's like, so if you bought if it's $100 right now, let's say, just for easy numbers, right? Bitcoin, it goes up to $101, right? Then you buy it, right? And then let's say it keeps going up to 110. And if it drops to 109, right? That's when you sell. Yeah. Right. So if it goes up or down by 1%.
That was the thought process behind it, but ultimately, I think what I was originally thinking when I did that was that if you do smaller coins, because those little incremental changes on like Solana is going to be a lot more impactful, and it's going to take a lot longer to hold the coins, because ultimately that's where the wealth is built, is when you hold the coins for a longer period of time through a increasing market. But ultimately with Bitcoin, we ran into a little trouble with that, didn't we?
Well, I mean, I don't know if I'd call it trouble specifically with Bitcoin, right? But you're right that it will be different per asset, right? Because something like Solana probably moves a lot more than Bitcoin, right? So you probably have different thresholds for that, right? But anytime you build an algorithm, you really want to tune it, right? So it's like the initial hypothesis, the initial idea was if it goes up by 1%, down by 1%, right? But then it makes sense to test different things. What about 2%? What about 3%? Right? You could test different scenarios of how to do this, right? And that's actually one of the really good things about building algorithms. So you be very calculated about it, right? It's not like, oh, I feel like doing this, right? It's like, no, let's see, how did it actually work over the past few years? Oh, that actually worked a lot better. Let's use that number instead. So when I first tried it with the 1%, it looked pretty good at first, but then when we extended the time frame, we did over a longer period of time, it didn't look as good. I played around with some different numbers. I tried 2%, and 2% actually worked a lot better. Right. So I guess kind of alluding to, when it's more in a bull market, you're buying more when it's in a state of momentum. Right.
Yep.
And that seemed to do quite a bit better. And actually have the results in front of me right now, if you want to see them. It actually worked out pretty good. Right.
Yeah.
Would you want me to share my screen?
Yeah, go ahead, share the screen.
Yeah, okay. So I mean, so as you can see it, right, basically doing the 2%, it works really well in a sideways market, right? I think that's the reason why is because you're only investing at times when the coin's going up, and because you're selling when it's down by 2%, you're kind of avoiding a lot of these falls, right? So the sideways market, so basically I did from January 2021 up until about today, which is, I think like July, like whatever I had the data till. But it did really well. It like tripled the returns of the Bitcoin. I'm looking at it here. It's 85% would have been the return versus Bitcoin would have been 26%, right? The cumulative return, compound annual growth rate. So in other words, the annualized returns of 60% versus 20%. So way better than Bitcoin. And then also the volatility was a lot lower. So meaning that you're taking on less risk too. Right. So I think this is a good way to avoid risk because, inherent in that strategy that you made is, when it falls more than 2%, get out. So you're kind of avoiding a lot of these big losses. Right.
Right.
So pretty cool. I mean, in the sideways market that basically happened from 2021 up until, mid 2022, like very good strategy throughout that. You would have actually made quite a bit of money doing that.
Well, and that's the advantage of doing this machine learning. Well, not machine learning, but crypto algorithms and whatnot is because you're not just throwing stuff against the wall and seeing what sticks. You're actually testing it out and seeing what's going on. Now, I refuse for you to call me that my strategy because, quite frankly, you built the damn thing. I just came up with the idea. But the idea I thought was something that I just worked out, just thinking from watching the markets and everything that's been going on the last few months is like, if you can get into the market when it's up and you have a bot that tells you when to get out and it gets out in the right time, you can avoid the losses and you can hold on to the money. And it seems like that worked out. So what do we do now? What are our next steps?
Yeah, so next steps, usually when I see results like this is I kind of want to poke and prod a little bit to see exactly like what the details are. So I'll try to change the time periods, right? So we did a year and a half. What about, 4 or 5 years, however much data we can get? How would it have done over those time periods, right? I'd want to play around with the different variables, right? What about 3%? What about 4%? Usually when you're doing this type of stuff, you kind of want to see a pattern, right? So to tell a story, so there's someone back in the day that wanted us to do a back test for him, right? And he was reading a book and it basically said, the way that you make money is you buy 3 different assets and, whichever one did the best over, and it's 3 specific assets, like bonds and stocks and international stocks. It's not too important which one, but basically it's like, you hold it for 264 days. And then, after those 264 days are up, then you flip it, right? And you make like a ton of money doing that. It's like, okay, well, I back tested it and that worked out, right? It was, okay, this is a good idea. But then the problem is that if you change it to 250 days, it doesn't do very well. 230 days, it does better again for some reason. 200 days, it does really badly, right? So it's kind of like this zigzagging thing that doesn't really have any coherence to it, right?
Yeah.
So what we'd be looking for in your algorithm would be, we tried 1%, we tried 2%, it's better, 3% should be better, right? Ideally, right? 4%, and then maybe we'll start to like peak, right? And we'll see that the ideal time to do it for is maybe 2.5%. Maybe that's the perfect thing to do for Bitcoin specifically, right?
Yeah.
So you want to optimize it to do that. And then once we have the optimization, we understand better how this thing works, then we could actually start paper trading it using fake money to actually trade this thing, right? Works out well with fake money, great. Let's turn on to real money. That's very simple to make all of these changes, especially with the technology that we have, right? Once you've back tested it, like flipping it to live, you've seen this, you've been taking our classes. It's literally like true to false, right? Or false to true. That's all you have to do, and it's trading live, right? So that's basically the process, right? It's like, we did some analysis on this, we back tested it, let's tweak it, let's try out different time periods, different parameters, all that sort of stuff. Once we're satisfied with, okay, this seems to be the most optimal way to do things, then we want to take that and actually start trading with it. Fake money at first to make sure things are working properly. And then if that goes well, then real money. And that's transition's very easy to do between all those.
Well, as you said before, this works really well in this sideways market, which has been happening for the last, say, 18 months, 2 years, whatever. Right. But what happens if it starts doing this meteoric rise again, like it did back in 2017 and 2016, where it just started going up and up and up and up and up? I have a reason to believe that this would probably work. But then all of a sudden, when it starts tanking again, that's when it's just got to shut down, because I don't think this thing's going to work at all when we're in a losing market. But you might find out it might work there too, right?
Yeah, I mean, we could check all that stuff, right? Like, I mean, you're saying it probably won't do well, or probably, let's actually test it, right? Like we have the data to do that, right?
Yeah.
Like we can just check, okay, well, from this time to this time, it was a downward market. Let's run it during that time period and see what it did.
Yeah.
Right. I actually think it'll probably do pretty well on the way down, because it's going to limit your losses, right?
Okay.
You're not going to be in Bitcoin as much, right?
Yeah.
But I think when it does go up, we should test this, right? Like, let's actually look at the data, right? Mm-hmm. I would think that when it does go up, you probably won't beat Bitcoin because you're being a little bit more conservative, right? Just that's the nature of the strategy, right? So, I mean, not every strategy is going to work in every single situation, right? There are some strategies that work well in all situations. There's some strategies that work well in sideways markets, some that work well in bull markets, bear markets, right? So you kind of got to know what tools you're using, right?
Right.
And then, so you could kind of pick that, okay, so it seems like we're in a bull trend right now. Let's use this big algorithm, right, to do that. But then you can also, and what I really think you should do is have multiple algorithms at a time. Right? Mm-hmm. So you will have one that works really well in the bull market. You have one that works really well in the bear market. And then the thing is that each one of them individually makes pretty good money, but when you combine them, they do even better.
Right.
Right? Because then it's like, okay, well, now you're in a bear market. So strategy 1 isn't doing very well. The strategy 3 is killing it, just making tons of money right now. So just, you can move that money over. Right, you can start diversifying your strategy as well. So it's a way of reducing your risk on investing in crypto, and also potentially raising your returns by quite a bit as well.
Yeah, well, and that's a lesson, I think. Let's do some shameless promotion for Lumiwealth here, because that's the advantage of doing these things. That's the advantage of learning algorithms. That's the advantage of learning how to use this for trading. And this has never existed before in human history. Technology has combined with the advent of crypto to create this 1-2 combination where, you couldn't even use this algorithm that I came up with. You couldn't have even used it on, say, like Apple stocks or on any traditional stocks, because they have such a high bar in order to invest. But because there is incremental buying in crypto, because it has this nature of volatility, because the technology is there, we can do the bots, we can do the coding to put it all together. This is the time when, you're going to start seeing people like me, who's otherwise a stupid sailor. I am going to make a lot of money with this thing, and it's all because of what you guys are teaching me. And I think that's just awesome.
Yeah, absolutely. Yeah, I mean, you're totally right about that. The fractional shares in the crypto markets is very helpful for this kind of stuff. You can be more accurate, and your transaction costs are a little different. And also you're right, the volatility as well. The fact that crypto is so volatile is actually really good for algorithms, right? Because if you're trading this thing manually, you as an individual, you're going to miss a lot of things, right? Like it could be while you're asleep, Bitcoin crashes 20%. Mm-hmm. It happens, right? It happened when Russia invaded the Ukraine. That there's a huge drop there, right? You could have taken advantage of that. You could have made a lot of money doing that, but you were asleep, right?
Yeah.
But your algorithm's not going to sleep, right? And it can be constantly paying attention to this. So let's say your algorithm that you have, if we went through that, I think it crashed like 20% overnight, right? You would have been fine, because it would have exited your position after a 2% drop. You wouldn't be in it, right? Yeah. And then as soon as it started to come back up again, you're gonna start making money again. So you automatically played that whole thing. It's awesome, right?
And what's so cool about this is we can actually see what would have happened, because we can actually test it with those numbers. And Absolutely. And we're not just throwing darts to say this is going to work or this isn't going to work. We can really test it and make it all work.
Absolutely. Wow. Yeah, definitely. 100%.
Well, Robert, this that whole episode is about doing computer or algorithm trading, and I'm gonna do a little bit of a brief, I think, on machine learning and all kinds of good stuff in this episode, and it's going to be, I think, This is the advantage. This is why people should get into crypto, because things like this exist now. So thank you so much for talking to me today, and I can't wait to show these people what we're going to do with this thing, because this is really exciting.
Yeah, it's very cool. It's awesome, man. Very cool.
All right, thank you for joining me, Robert, and that is all I have for today. Thanks. Hang on one sec. I'm going to talk to you off air for a second, real quick. But
Okay.
thank you so much. And if you're interested in getting into Lumiwealth, which you should, because I'm doing it, and it is absolutely one of the coolest things in sliced bread. You really got to try it out. Lumiwealth.com is the way to go. Thanks for watching, and we'll be right back after this message.
I'm a single mom of 3. I've been working in healthcare settings, specifically in clinical laboratory medicine, for about 25 years. So I was actually surfing the net, and I saw the advertisement for Lumiwealth, and I said,
And lastly, would you recommend Lumiwealth's classes to someone else?
I definitely would. I definitely would actually have. So.
Oh, nice.
And now for our second story. With machine learning now behind so many technologies, from Netflix's recommendation algorithm to self-driving cars, we really ought to look at machine learning in our daily lives. The global machine learning market is predicted to grow from $8.43 billion in 2019 to $117.19 billion in 2027. The term machine learning is often used interchangeably with the concept of artificial intelligence, but that's a misnomer. It's a separate technique and branch of AI that relies on algorithms to extract data and predict future trends. In fact, machine learning is a subfield of artificial intelligence based on algorithms that can learn and make decisions with minimal or no human intervention. In 2020, $3.1 billion in funding was raised for machine learning companies. Machine learning has the power to bring transformative changes across multiple industries. Growth industries for machine learning include medical fields like pharmacy, oncology, and medical record keeping, manufacturing processes like monitoring equipment performance, quality control, and predicting energy consumption, and of course, the auto industry with the advent of self-driving cars. Most machine learning algorithms are designed to improve at what they do as they comb through more data. In predictive oncology, for example, a computational research engine builds a large set of predictive models and selects the optimal treatment plan. By combing through 150,000 patient records, 131 tumor types, and 30 types of cancer around the clock, it can compare potential drug formulations to known patient responses in live treatment environments, giving cancer researchers and oncologists greater insight into optimal treatments based on every known factor. This show is all about the bots, and machine learning has a chance to change how we trade crypto in a big way too. By learning about our trading individual styles and using real-time trading data to predict market trends, machine learning can revolutionize the way we interact with the crypto landscape. There's a whole class on machine learning offered at Lumiwealth if you want to know more, but for now, you need to know that machine learning is taking over, and it's time we all understood it a bit more about what's coming. Whether it's algorithms to trade crypto, a bot that drives you to the store, or a life-saving computer server that diagnoses and prescribes treatment for cancer, bots are changing the way we live. Now, I'm sure you saw The Terminator and have developed your own fears and trepidations about what lies ahead in terms of computers and robots. Science fiction has long stoked the human psyche to fear this technology, while at the same time fostering a fascination with its potential. Will some jobs disappear because of bots? Absolutely. Will other jobs be created? Well, you know that too. It's fear of what we don't know or understand that causes us to lash out and resent this advancement. This show is designed to educate you about the future, as best I can do it in my little trailer located somewhere in the Utah desert. And while we need to be wary of the privacy we give away and the potential for bad actors to take advantage of our lack of sophistication in this new world, we cannot run from it or stick our heads in the sand and hope it goes away. The troglodytes of Greek mythology turned away from knowledge and learning in favor of living in caves and maintaining their ignorance. We must stare bravely ahead on this voyage and embrace the changes that come, or else those changes will be cast upon us rather than crafted by us. Now is the time to embrace this new world we are entering and enjoy the fact that we might be authors of this futuristic tale and architects of this futuristic world. Open source technology, decentralized finance, and artificial intelligence can work hand in hand to build the world of tomorrow, but they are mere tools to do the building. It is up to us to provide the vision. And that is this week's takeaway. Domo Arigato to you for watching and listening wherever you may be. I do hope you've enjoyed our little foray into this futuristic world of bots and algorithms. This show goes out every week on Glacier FM radio, the entire podcasting universe, and on YouTube. Whichever way you decide to join us each week, hit that subscribe button and share this with your friends, please. Big thanks to Robert and all the good folks over at Lumiwealth for not only teaching me about crypto trading with bots, but also making it possible for me to share what I am learning with you. Follow me at thatsailingguy on social media. Like us on Facebook at the Crypto Nightly News. And stop by the cryptonightlynews.com to check out the transcription of this episode and check out all our other episodes. We'll see you again next week when we dig into artistic expression in the world of crypto. So make sure you tune in each week at 9 p.m. Eastern. This is Sunday, September 4th, 2022. May you celebrate a safe and happy Labor Day with you and yours. This is the Crypto Nightly News, and I am your host, Christopher German. Trade safely, my friends, and have a wonderful holiday tomorrow. Good night, and God bless. Crypto Nightly News is a Charted Life production.